Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your weekly technical analysis of LME 3-month lead and tin. LME 3-month lead. This market had between March to the last 2 weeks a more or less sideways movement. Prices had been capped by layered resistances and sustained by layered supports. On the top side, we had previously resistance that is now support from the 50% Fibonacci line of the March 2020 to March 22 move at 21.35. And in the past from the medium moving average, currently 21.15, and to a lesser extent by the short medium moving average, currently 21.32. We had a dip down in the middle of May, testing down below all the moving averages and down to the neckline, currently at 19.25, of the old November 2022 to February 2023 head and shoulders continuation pattern, where it finally found some support. This support saw a rally through June, up through the previously mentioned resistances, and halt again at the same lower trendline extension of the May to June 2021 descending triangle, which has been so influential here, and is currently at 21.86 and highlighted in purple on my daily chart. This was an important stopping point, and I'll discuss this again shortly, as it had previously made highs in May, mid-April, late, mid and early February this year, and even 2 weeks ago. You can see all these highs had been around the trendline extension. Thus, this purple trendline had developed some form in capping rises. In late June, prices dropped down again from this trendline extension, though this time only as far as the January 2020 high at 20.39 before reverting back up. And then in late July, dropping once more, but not that far before reverting back up again in mid-August, up to the purple neckline. So what did all these gyrations, what did they end up with? Well, a number of patterns. Firstly, we have a very large mid-February to late July reverse head and shoulders bottom, and a smaller mid-June to late July reverse head and shoulders bottom as well. Add to that, we can view this last action as a part of a late May to late August ascending triangles, or even a pair of triangles, but rather keep it at just one larger one. On top of all that, the action from December 2022 today could also be seen as a potential very large rounded bottom. The key to all these patterns was whether the prices could punch up and over the purple trendline extension, which they managed to do last week, though the market is still trying to stabilize over all this week. Nevertheless, it obliges me to lay out some potential topside targets just in case. Thus, for the large reverse head and shoulders bottom, we have a primary target X in the 23.13 area, with a secondary harder to reach target X1 in the 23.71 area. For the smaller reverse head and shoulders bottom, we had a primary target in the 22.32 area and a secondary harder to reach target in the 22.58 area. Both of these targets have already been achieved. Finally, for the ascending triangle, the larger of the two potential patterns here, they have a primary target X2 in the 23.20 area with a secondary harder to reach target X3 in a 23.84 area. LME 3-month tin. The most obvious feature here continues to be the late October 2022 to mid-March 2023 bullish shift pitch hook, which is highlighted in dark blue on my daily chart. Now, I drew this back in the end of April, just as we were going into May, and it gave the bullish angle of attack of this market until mid-August. It was at that time that the market punched down through the lower time, currently at 25.720, as well as the short medium moving average, currently 27.110, the medium moving average, currently at 26.525, and for a while, on two separate occasions, under the slowly rising long moving average, currently 25.985. Interestingly, these moving averages have slowed and eventually halted earlier attempts lower, and I suspect this may explain why we have not seen a heavier follow-on lower, and the construction of last week's horn bottom and the potential double bottom formed over August. On top of that, I have a strong suspicion that the market over August may be doing what a lot of markets do when they break down through such a long-dated bullish pitchfork, and that is to track along the underside of the lower tide, using it as an attractor. The longest I recall one of these lasted in recent times was just under 2 years on the E-mini S&P futures, some 5+ years ago. Thus, I am not yet ready to retire this bullish shift pitchfork, not just yet, as I see it may have a role in the near future. Just watch out in the meantime for the 50% Fibonacci line of the October 2022 to February 2023 move at 25,020. This has done some sterling work in holding up the market, and the two congestion areas further down between 23,850 to 24,155 and 22,895 to 23,055.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.